Hi guys, welcome to another episode of this beautiful video in this channel. This is weekly chart breakdown by EEO Analytics. This is another episode of me breaking down the market from the higher time frame perspectives down to the lower time frames. Um, Sorry guys for making this video late in this episode. The reason why this video was late was I want to get like the real movement of the market. I wanted to know where the market is actually moving because last week the market was actually not clear. It was not very clear to me. Even last week, I dropped the weekly chart when I dropped last week was in season. I dropped season one, but I was unable to drop season two just because I wasn't clear of where the market is going. But now that I have a clear direction of the market, I've decided to make another episode so that you can have a clear view of where the market is going. So let's go to the chart. Um, so as I do as my routine before going to the chart, I like to check the fundamentals for the week. I like to check the major news, the major economic data coming up for the week. So let's check the news out first before diving into the chart. Hold on, guys. Yes. So I like using trading Forest Factory to check my news because it's more of accurate and timely. Yeah. So this week we're going to be having AUD GDP data quarter to quarter forecasted at 0.7%, greater than forecast, greater than previous. Also, we're going to be having the CPI data for CHF month to month, the forecast less than previous. We're also going to be having the non-farm employment change data from the US dollar, and also we're going to be having the ISM service PMI also for the US dollar. Then we're also going to be having unemployment scheme on Thursday for the US dollar. Then on Friday we're going to be having unemployment rates and employment change for CAD. We're also going to be having the PCE price index for the US dollar and the Prime consumer sentiment data, and also the Prime inflation expectation data for the USD. So this is the major fundamental news we have in the forex market this week, but we might get some data added or removed. But this is the data we have for this week. I'm positioning myself more this week on technical because we are getting to the end of the year. So technical become more vulnerable this season. That's a tip, guys. Technical become more vulnerable this season. So I'm going more on technical this month, starting from this week. Yes, so let's go back to the chart and let me show you guys what I'm expecting the market to do for this coming week. So back to chart. As you can see, as we know, the DXY has been moving upward for some time now after a decline at the beginning of this year. So let me go to the weekly time frame. We go to the weekly time frame, you can see that the DXY has been falling since the beginning of this year, but unexpectedly we have started seeing some form of reversal from here. I said this in my last video, the market has given us a double bottom chart pattern. The only thing stopping this from happening, the only thing stopping it from giving us a full reversal is this neckline. price is finding it hard to break this neckline. So once we are able to break this neckline, trust me, the US dollar is going up here. Once we're able to break this neckline, the DSY is going up there. Yes. So if I go to the daily time frame, I can see the structure more clearly. So as you can see, this is the neckline. This is the neckline that we're talking about. Price went here, fell down, came here, retrace, came here again, retrace. So you can see market is finding it hard to break that trend line, to break that neckline actually. So back to what I was saying, what I'm expecting the market to do this week is, as you can see, the market has been moving in, sorry, the market has been moving in series of higher highs and lower lows. You can see higher highs here, higher low, higher highs, higher lows, higher high, higher low, higher high, higher low. Then we have an equal high here. So once the if the market is unable to give us a higher high, that is a one sign of a possible reversal. So we're expecting the market to give us something like a lower low here, but see what the market did. The market gave us an equal low instead. So the market gave us an equal low, and since then that started to be changing its movement to the upside. So we're mark this low here. From this low here, you can see that the market has been unable to break the previous low, which still makes the trend valid. So for as long as price is unable to break the low of this daily time frame, as long as market is unable to break this support level, the dollar is still in an uptrend. And again, guys, this is the dollar index that I'm analyzing. I'm not analyzing the pairs to trade yet, but I like analyzing the US dollar first anytime I come to the chart, because the US dollar gives the directional bias and the clarity, because I majorly trade USB pair. I don't really trade other type of pair. I usually trade a pair that includes the dollar. So for me like that, for me to trade in that kind of pairs, I have to check the dollar index first before going down to other pairs. So as I was saying, market was unable to break this low here, so causing a continuation of the trend. So if we dive down to the 4-hour time frame, that's when you see the structure clearly and how to enter this market. So as you can see, when the market was coming down to give us this possible, it gave us lower low. This is the lower time frame perspective now. Lower low, lower high, lower low, lower high, lower low, lower high, and lower low. Then since when the market has been moving upward, giving us the signs of possible trend continuation. So how do you navigate this? How do you enter? How do you use this opportunity here? So let me give you guys this entry strategy that I use to enter the market after confirming the directional bias of the market. So as you all know, the US dollar is inversely correlated with the euro dollar. So I'm going to be using the euro dollar to show you guys how to enter the market on the lower time frames, because it has come to my notice that traders confuse directional bias strategy with market entry and exit. The strategy you use to check the trend is different from the one you use to enter. Okay, guys, I'm going to be showing you guys how you're going to enter the market in the lower time frame. So let me use the Euro USD for that, since it has the inverse correlation of it and we can't trade the Euro dollar. So as you can see in the Euro USD, same thing as the dollar, the market was unable to break this this high for this, and able to break this high to change the trend. So you give the market trend continuation pattern. So you go down to the 4 hour time frame, you can see here also that the market has been moving in series of higher highs, higher low, higher highs, higher lows, higher highs, higher low. Then we have this higher high here, and price has been moving down now. So to enter this market, to continue the trend of this market, this is how I do it. Now, if price is able to break this low here, if price is able to break this low here, it can't just keep moving down. It has to retrace a little bit. So price is going to retrace to this previous resistance over here. Let me mark out the resistance. This previous resistance over here, this is my key level now for entry. This is my key level now. So what I'm expecting for the market is to give me a little bit push here to break this key level and retest it, then take my entry from there. Then I take my entry from there. So what I'm basically expecting for the euro dollar is this. Show you guys. So I'm expecting the euro dollar to do something like this. Stop loss a little bit above the key level. So I'm expecting the market to break this level here, somewhere around here, retest it and come down. And what will validate this trade is the confluences. The confluences I like to employ my strategy are Fibonacci, chart pattern, and candlestick confirmation. And looking at this trade, you can see that this level here looks like an inverted. This level here look like an head and shoulder chart pattern. First confluence. The second confluence is if price is able to break this level here and retest it, I'll just mark out my Fibonacci level from here, swing low here to the swing high here. You can see it's also connecting with the 50 to 61 point adjustment level, which is the golden zone for the market. Second confluence. And if market is able to break and we test this level here, I'll go down to the 1 hour time frame, look for my entry candlestick confirmation. So from here I can look for a bearish engulfing pattern. So if market is able to break and we take here a bearish engulfing pattern in this level, will give me a go ahead to enter this trade. So you can see guys that this is a way to enter the market effectively. This is a way to enter the market effectively. So this is my bias for Euro USD. A breakout from this level and a retest, then a continuation to the downside. And another pair I would also like to share with you guys is this USD JPY. So as we all know, USD JPY has been running to the upside for some time now. If I go to the daily time frame, I can see the structure more clearly and see that the market has been moving in front of higher highs and higher lows. You can see here higher highs, higher lows, higher highs, higher lows, higher high, higher low. Then we have this high. So this is our reference high and our reference low here. So as you can see, so reference low and our reference high. Now if you see here now, I mark out my Fibonacci level from swing low to swing high. You can see that the market has been able to tap in my golden zone, which is the 50 to 61.8 retracement level, and we see the market has been rejecting from there, likely trend continuation pattern from there. So if I go down to the lower time frame and the 4 hour for my entry strategy, you can see same thing of what we saw in the Euro USD. The inverse correlation is happening in the US dollar, so you can see this level here. I got this some here. So you can see the market has been moving lower low, lower high, lower low, lower high, equal low, lower high, and with lower low here, you can see price has moving. So what I'm expecting for market is to give me a push up here, a retest, then a continuation to the upside. And what I will use to confirm that is, if you can look here, we also have a trend line here. So if I mark out this trend line to this place, you can see, so a breakout from this trend line, a retest to this place, support plus trend line retest, candlestick confirmation pattern, then we'll take this market to the upside here. So basically expecting the market to do something like this. And stop somewhere around here. So I'm expecting the market to give me a breakout here, a retake, then upside. As simple as that. You can just go down to the 1 hour time frame to find my entry candlestick confirmation. And that's all. That's all, guys. That's all, guys. So guys, I've been able to share two possible outcome and two major pairs now. So I'm bullish for DXY. I'm bullish for DXY. I'm bullish for DXY. So guys, thank you for tuning into this episode of Weekly Chart Breakdown by EU Analytics episode 4. Thank you guys for tuning in, and I love you guys. Bye. See you on the next one.